Welcome back to the deep dive. Okay, let's jump straight in today. We're looking at London's ultra-prime property market.
That's right. Specifically, homes priced at $5 million up. We've got the latest analysis from Savills. Fresh data for Q3 2025.
And the mission today, getting under the skin of what's happening at that very top end.
Well, the big picture really is that the market seems to be kind of on hold. Subdued is the word Savills uses.
On hold. Okay. And this is leading up to the upcoming budget, right? That seems to be the main driver.
It looks like it. There's a lot of anticipation, maybe some nervousness around what might be announced.
It's always fascinating, isn't it, how much political events can sway these, multi-million-pound deals. We're talking serious capital.
Absolutely. And the numbers bear out this sense of caution.
Okay, let's get into those hard numbers then. What are we seeing for Q3?
So in Q3 2025, there were just 93 transactions recorded in that 5 million plus bracket.
93. Okay. How does that compare?
Well, it's an 18% drop compared to the same quarter last year, Q3 2024. So quite substantial.
18%. Wow. And what about total spending?
Year-to-date spending on these 5 million plus homes is $2.94 billion.
Right.
And that figure's down 15% compared to the same period last year.
Okay, hang on. An 18% drop in the number of sales, but only a 15% drop in the value spent. Does that mean the average price of the properties that are selling is actually a bit higher?
That's exactly the interesting nuance here. It points to where the slowdown is really biting.
Oh, one.
The analysis suggests this dip, the overall slowdown, is disproportionately driven by weaker sales at the very, very top. We're talking properties priced over $10 million.
Okay, so the 10 million plus segment is dragging the numbers down.
Precisely. Whereas the segment between 5 million and 10 million is described as only slightly subdued, not falling off a cliff, just quieter.
Right. So what's behind this hesitation, particularly at that 10-pound plus level? Is it all just budget nerves?
Well, the budget anticipation is definitely a key factor. Buyers are clearly, biding their time, waiting to see what happens fiscally.
Makes sense.
But there's another layer here. Savills points out that the pool of potential buyers, especially international ones, had already shrunk.
Yes, since the changes to the non-dom regime.
Exactly. That tax status change seems to have reduced the number of ultra-wealthy international buyers looking at London before this budget uncertainty kicked in.
So it's like a 1-2 punch. International demand cooled, and now potential domestic moves are on pause.
Sort of, yeah. Well, it's not all static. There's still activity.
Oh. Who's buying then, if many are holding back?
Well, this is where it gets interesting. There seems to be a layer of opportunistic buyers.
Opportunistic, looking for deals, you mean?
Yes, people looking for what Savills calls compelling value. They see a slower market, maybe softening prices in some areas, and they sense an opportunity.
And who are these buyers typically? International, domestic?
The profile seems to be shifting. It's leaning more towards domestic buyers looking for a primary home.
Really?
Or
UK residents?
Yeah, taking advantage perhaps of less competition, especially from those international buyers we mentioned. And they seem focused on second-hand houses rather than, say, brand-new luxury apartments.
That feels like quite a significant shift. Domestic buyers stepping up.
It is. And it's reflected in where people are buying to.
Okay, so location, location, location. What's changing there?
Well, you know the traditional prime central London postcodes? Kensington, Belgravia, Mayfair, Chelsea.
Sure, the classics.
They accounted for 42% of these 5 million plus sales year to date.
42%. That sounds lower than usual.
It is. Last year it was 48%. So a definite dip in concentration there.
So where's the activity moving to?
Buyers seem to be widening their search nets. We're seeing more interest in areas like Notting Hill, Bayswater, South Kensington, Marylebone.
Spanning outwards a bit.
Exactly. And interestingly, Kensington itself actually led the sales count this year at 12%, ahead of Chelsea and Belgravia, both around 10%. That's a bit of a shuffle in the usual pecking order.
Kensington pulling ahead. Interesting. Okay, so we have slowing sales, shifting buyer profiles, changing locations. What about supply? Are sellers rushing to list before prices potentially soften further?
You'd think so, perhaps, but actually, no. Savills notes there hasn't been a rush of new stock hitting the market since the new government's first budget signals.
So owners are holding firm, not panic selling.
Seems like it. They seem reluctant to list if it means accepting a lower price. However, the amount of unsold stock, homes already on the market, has risen. So there's a bit of a disconnect building. Demand is down, new supply isn't flooding in, but existing stock isn't clearing as quickly.
A supply paradox almost.
Yeah.
Slow down, but not a fire sale.
Right. But we need to add a crucial caveat here, especially at the very, very top.
Okay.
London's fundamental appeal, its status as a global safe haven for significant wealth, seems intact. There's still multiple transactions happening for over 30 million.
30 million. Wow.
Yeah, for what they call exceptional best-in-class homes. That super, super prime tier seems pretty resilient to these wider market jitters.
So, okay, let's pull this together. The market split, isn't it? The 10-meter-plus segment is feeling the political uncertainty most acutely.
Yeah, that's where the weakness is concentrated.
The 5 meter to 10 meters range is quieter, slightly subdued, but the truly exceptional properties, 30-pound meters and up, are still trading. Global appeal holding strong there.
That seems to be the picture, yes. Sensitive to politics, definitely segment-specific, but still fundamentally attractive at the highest level.
And the key shift seems to be the rise of the domestic buyer stepping in while others hesitate.
Exactly. They seem to be the ones driving the activity that is happening right now.
Right, which leads to a final thought maybe for you listening.
Huh?
Given that domestic buyers are now, relatively speaking, more dominant in this market pause, how might the government view this in the upcoming budget? Will they see this domestic base as someone to incentivize further? Or perhaps, contrast it with previous policies targeting international non-doms and maybe look at them differently from a tax perspective?
That's the multi-million-pound question, isn't it?
Yeah.
Something to definitely watch out for.